Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to see it, if you haven't already. In this video, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence recreated here on this daily chart is the bright red 2009 to 2016 bullish shift pitch hook, and the specific key piece is the bright red upper tine, currently at 13,460, that slashes across and just below this week's action. This bright red upper tine had previously capped prices, despite the one occasion back in December last year. It had still capped prices until May this year. It was a key piece of overhead resistance, but has been breached and now possibly broken. I started 5 weeks ago looking for the next pattern, and this came down to these possibilities. The first and still working pattern is the purple November 25 to March 26 bullish shift pitch fork, with prices in between the overhead purple middle tine currently at 14,421 and the purple lower time below, currently 12,762. The second possibility is just about working as a pattern right now and is one I've been somewhat uncomfortable with, but has shown some interesting influences. It is a possible late December 25 to early May this year 26 reverse head and shoulders pattern. A pattern that is usually considered bullish, though there is a bearish continuation variety. Please note the bright pink neckline, which is currently 13,393, is close to the breached bright red upper tine. The market is now just above the bright pink neckline, and I previously considered the following, which I am happy to repeat again today, and I quote, "Lay out what I consider potentials right now for targets as yet, but potentials, not targets as yet, but potentials for the move higher. Thus the primary potential will be up in the 14,747 area, thus above the high of the market, and a secondary harder to reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern, and I think it is the weakest by a country mile of the ideas mentioned." End of quote. This weakness has been justified as prices have for the most of June had been below both bright red upper tine and bright pink neckline, though we are over both now. I will note these potentials, but I have chosen for now not to mark them as targets on my daily chart, for the simple reason that I think other more recent patterns have taken on the bullish incentive, along with their subsequent targets. The third, newer pattern can be seen as either a dark blue early May, late to late June descending triangle, currently 13,444 to 13,669. Or it can be a longer term end of January to late May possible as descending triangle, utilizing the same base but with a higher downtrend, currently at 13,981. I've not highlighted the second upper trend line of this pattern as I am not convinced on this latter pattern idea, but I thought I ought to mention it just in case. The earlier and smaller dark blue descending triangle has had a breach of the topside downtrend today, leading me to now detail some potentials for this pattern. Thus a primary potential will be up in the 14,210 area, whilst the secondary hard to reach potential will be up in the 14,515 area. At the same time, I will after today retire target X down at 12,645. This target is the secondary harder to reach potential from the earlier break lower that managed to previously breach the primary potential stroke target down at 13,033. This is something I mentioned last week. Finally, there is a very recent pattern I would like to discuss, something I spoke about last week. is a mid-June to date small ascending triangle pattern with a small gold uptrend, currently at 13,420. I spoke last week about this pattern having, and I quote, a primary target X1 for such a move higher is up in the 13,828 area, a secondary hard to reach target X2 up in the 13,976 area. What is interesting about these targets is they are beyond the dark blue downtrend, that's currently at 13,669, of the previously mentioned descending triangle, and will thus likely negate and retire target X below as a false break on the downside if they come about, end of quote. Well, these things have come about, and target X1 at 13,828, primary target, has been reached today, with opportunities for target X2 up at 13,976 still on the cards. This leads me to the final point, to the point I made 2 weeks ago when I said, and I quote, all this leads me to suspect that with all these patterns we are coming to some sort of cusp, maybe in the next month or so, so watch out, as we could have an explosive rendition after the possible cusp, end of quote. Now this is still unsettling me today. LME 3-month aluminium. The market here edged out, initially above and now in the last 4 weeks below, from what was originally a bright green April May 2025 to date bull channel that morphed over time into an April May to date very large bright green rising expanding wedge pattern, currently 32.12 to 37.92. However, the edging out has only resulted in breaches, extensive breaches I grant you, but just breaches, not breaks of this very large rising expanding wedge pattern. The price drop from the upper trend line back at the start of June saw prices falling, hesitating for a bit, between a short stroke medium moving average, currently at 34.06, and the important purple middle time, currently 34.86, of the big old November 2015 to April 2020 bullish Andrews pitchfork, and forming a bearish half hesitation stroke bear flag that dropped down to the medium moving average, currently at 34.19, forming another bearish half hesitation stroke bear flag there, with a subsequent second leg drop down to the 50% Fibonacci line of the March to September 22 move at 30.76, where they stabilized. 4 weeks ago I said, and I quote, on this basis I'd watch out to see if we soon form yet a third bearish half hesitation stroke bear flag pattern around the gold long moving average below, we're currently at 31.92, and the bright green lower trend line, currently 32.12, of the previously mentioned very large rising expanding wedge pattern, end of quote. We have indeed formed a pattern around these two supports, but it was not, or should I say, is not right now a bearish half hesitation. Instead, we have seen the formation of what looks like a 4-week-old or thereabouts possible reverse head and shoulders pattern, a pattern that is usually seen as a bullish reversal, though a bearish continuation pattern does also exist, or a possible but so far unlikely bearish cat's ears pattern. That's the pattern of a small double top after an extensive drop, such as the one we saw in June. We're still finishing the construction of this pattern, so I cannot give a definitive indication on it, but I did last week give an idea of the potential size of the move should the pattern complete as a reverse head and shoulders pattern, and price has subsequently turned, breaking its bright red neckline, currently at 32.39. Thus, a primary potential, and I quote, would be plus $123 and a secondary hard to reach potential would be plus $173. Both of these are for confirmed breaks higher over the bright red neckline. And now watch with interest if this is what the market will do, as further down we have the first of a series of stratified bands of congestion between 30.65 to 30.76 and again between 29.74 and 30.23 that contains the dark blue neckline extension, currently at 29.90, of the large 2022 to 2024 reverse head and shoulders pattern, end of quote. Now, 4 weeks ago I started looking at the whole 2026 action as well as earlier from summer last year as a possible new and big pattern. I said at the time, and I quote, this whole 2026 to date structure, possibly even earlier, reminds me of an inverted scallop pattern. A thought and pattern I might explore if this move lower continues below the gold long moving average, end of quote. Well, 2 weeks ago, I amended that view from a possible inverted descending scallop pattern to a bearish bump and run reversal, with the market then in the run phase. We've already reached the primary target of this pattern at 32.02 and still have the secondary harder to reach target X down at 29.75, just under the dark blue neckline today. However, in the light of the possible small reverse head and shoulders pattern, I was thinking last week of at least suspending this pattern until I see if the small reverse head and shoulder pattern has the desired effect. But this week, well, I've already said I would retire target X, so that is that. Finally, I should once again like to expand on the purple middle tine now above, currently at 34.86. And that's of the very large November 2015 to April 2020 bullish Andrews pitchfork. This bullish pattern is still in operation, as the upper tine is right now still up off the top of my daily chart, and the purple lower tine is still down towards the lower end of my daily chart. And the lower tine is currently at 26.60. This leads me on to my final point, and that is all these recent actions. We made a monthly key reversal down. With all these, we've made a monthly key reversal down for June last week. Well, the week before last, I should say. With all the ramifications that may have. Though, to be honest, none of them have really shown up as yet. LME 3-month lead. The market's recent moves lower has led to originally 3 patterns forming, with an additional one last week. The first was the monthly key reversal down for June, finally formed 2 weeks ago, and I've seen a follow through lower throughout July. The second pattern is the early May to late June head and shoulders top, a bright red neckline above, currently at 19.09. 4 weeks ago I said about this pattern, and I quote, "We're in the final stages of completing this pattern, so I cannot give targets below, assuming of course it is a head and shoulders top, but I can give an idea of the size of the move should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we'd have a primary move of about minus $50 under the neckline break, and a secondary harder to achieve move of minus $97 under the neckline break." End of quote. Well, we had a break lower below the neckline 4 weeks ago, and I added 2 weeks ago this commentary, and I quote, "Since then we have had a break lower, and hence it gave a primary target 1881, a target we reached today, and a secondary harder to reach target X1 down at 1834. End of quote. 3 weeks ago we moved down relatively close to target X1 before backing up a little, but only as far as the congestion at 1888 and the lows of March. We spent most of 2 weeks ago hesitating there before last week heading lower. We came closer still to target X1, very close, but we have backed up late on last week, but this time only as far as the congestion at 1888, so it's a lower high, before halting the rise, but still bringing up the lows. A somewhat bearish sign. Now, I said last week towards the end of my commentary that, and I quote, "The only quirk would be if we form a double bottom over the last 3 weeks or so." End of quote. This is still true, but I'll also add that an alternate quirk would be if the market forms a possible cat's ears pattern, a bearish pattern akin to a small double top pattern after a big fall, such as the one we saw in June. I wait and watch to see whichever outcome the market chooses. Then there is a new pattern drawn only last week, and that is a dark blue January to June bearish Andrews pitchfork, which might show some insight into the bearish angle of attack here. Over the last few weeks, prices have bounced up off the declining dark blue middle tine, currently at 1839, twice in the last 3 weeks, showing support, if a declining support, but showing support each day. This is one to watch, though I am of course happy in a heartbeat to finesse it to a shallower bearish shift pitchfork if the market demands it. This brings me to my final point, a point I've been making here since the start of 2025, and will continue to do so going forward. At the end of December 2024, we saw the market created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to some of the other metals. Indeed, prices are only about $55 or so lower today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now, with prices where they are, that one should still look at all things going forward in this year and beyond, here in this metal in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.